Thanks for clicking. The London and St. Thomas Association of Realtors, LSTAR, just released London's real estate data for the month of January, showing a continual drop in prices. In fact, as we'll see, London's real estate market has now lost all of the price gains made in 2022 and 2021, with the average price now down $260,000 since its peak in February. But with fixed mortgage rates continuing to drop as a result of falling bond yields, and LSTAR predicting that London's market will return to balance in 2023, have all of these price drops made London's real estate market any more affordable? So what I want to do today is go over January's real estate data, take a look at how much affordability has changed since we reached our peak in February of 2022, and then discuss what to look for next. Speaking of next, the Toronto Regional Real Estate Board is set to release its data for the month of January tomorrow, and we'll obviously have an update out on that data on this channel. Click like and subscribe if you want to get those updates, but for now, let's get into January's data. Onto the data. First off, the benchmark price. The benchmark price, if you remember, represents the home with the most popular set of features. That price was actually up, though marginally, in January. In December, London's benchmark price was $566,600, and that was up a little less than $2,000, up to $568,300 in January. So we have about a $1,700 increase in the benchmark price, but the benchmark is where the price increases stop. The average price of a home in London was down substantially in January. In December, the average price of a home was $591,526, and that dropped over $25,000 down to $564,600. That's nearly a $27,000 price drop in just a little over a month, and that's almost a $260,000 price drop since London hit its peak average price of $823,000 in February of 2022. And that's also an 8.5% drop since January of 2021. 2 years ago, so London has erased all of the gains made between 2021 and 2022. And the median price of a home in London was also down in January. The median price of a home, if you'll remember, that's where half as many homes sell over that price and half as many homes sell below that price. The median price in December was $561,500, and that dropped about $14,000 down to $547,450. So we have about a $27,000 drop in the average price of a home and about a $14,000 drop in our median price. With that said, the sales to list price ratio actually slowed down a bit. The sales to list price ratio, the SLPR, that measures how much over or under a home sells for asking. So if a home was listed for $100,000 and sells for $90,000, the SLPR would be 90. In December, the SLPR in London was 96.4, and that actually bumped up in January to 96.6. So homes are still selling for under ask price in London, but less so, about 2% less under asking price than they were in December. And the relative amount of inventory on the market also dropped in January, even with the price drop. If we look at the months of inventory measurement, the MOI, which measures if no more inventory came to market, how long would it take for London to run out of homes, run out of properties for sale? The MOI in December was 3.3, and that dropped down to 2.9 in January. So if people just stopped selling their homes in London, we would be out of homes for sale in 2.9 months. And finally, homes sold a little bit quicker in January than they did in December. If we look at the median days on market measurement, that measures how long homes sit on the market before they're sold, with the median number meaning half as many homes take longer to sell than that number and half as many sell faster. The median days on market in December was 28. And that shrunk down to 22.5. So the median home in London takes about 22 and a half days to sell, which is much faster than December's 28 days, but a lot longer than we saw a year ago when, on average, homes were taking 5 days to sell. So, in summary, the benchmark price, the price of the home that represents the most popular set of features, up about $1,700. The average price down about $27,000. The median price down about $14,000. Homes are going for less under asking. Homes are sitting on the market for less time, although marginally. And we have a little bit less inventory than we had in December. All in all, London's market continues to slow. Prices continue to drop. Although we have seen at least some very small signs, some very small glimmers of hope that the market might be returning to balance. Early days, but very small signs nonetheless. But is it any more easier to buy a home in London than it was when we had our peak in February, back before the Bank of Canada had raised interest rates? London's peak price in February of 2022 was $823,842. If we use that average price of $824K and we qualify at 5.25%, which is what we had to at that point in time, we use minimum down payment requirements with zero debt and a 25-year amortization, the needed income in February of 2022 was $175,000 to buy that average home. Fast forward to right now, and a decent 5-year fixed rate is 4.64%, and the average price of a home is $565,000. If we use that $565K purchase price, qualify at 6.64%, 2% above the 4.64 contract rate, as per the stress test, use minimum down payment requirements with zero debt and a 25-year amortization, the income needed for that average house is $135,000. So, $175K needed income when London was at our peak versus $135K required income to get that average price in London now. With rates coming down, at least for now, houses are becoming a little bit more affordable in London. It's a little bit easier to qualify for that average home. But will this lead to a major return of home buyers in London's real estate market in 2023? Maybe. Qualifying for a mortgage, at least for now, is a lot easier than it has been for the past few months as insured mortgage rates have continued to fall. With that said, I think a lot of buyers are waiting it out for now to see if prices fall even further, and they very well might. A poll just came out today showing that 45% of holders of variable rate mortgages will need to sell in the next 9 or 10 months if the Bank of Canada does not lower interest rates. And that poll comes as the Federal Reserve just raised interest rates again and signaled that more will be coming in the future, which will put more pressure on the Bank of Canada to raise rates in the coming months ahead. So, while we don't have any data on the number of variable rate mortgages held in London specifically, I can imagine that London probably went the same way as the rest of Canada, and we had a lot of holders of variable rate mortgages during those pandemic peaks, during the pandemic when London's real estate market boomed. If these rates continue to rise, even if these rates just pause, but if these rates continue to rise, we can expect to see a lot more anticipatory selling in the London market, as holding these mortgages with floating interest rates where the cost of borrowing continues to get higher and higher, becomes prohibitively expensive. And as such, I think we're going to continue to see even more inventory hit the market, which will put more downward pressure on prices. Again, if this poll is to be believed, but it's definitely possible. With that said, we will continue to track London's real estate market on this channel every month when the data comes out. Click like and subscribe if you want to get those updates, but for now, thanks so much for watching.